Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing world of corporate filings. In this video, we're diving into KKR, Capital Corp's latest prospectus supplement, where we'll uncover their plans to sell up to $750 million in common stock. This report looks pretty boring on the outside, but I promise we'll find some interesting details. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for you to join. So what's the big deal? KKR Business Development Company, or BDC, is looking to raise a substantial amount of money. They plan to use this money to invest in new or existing companies and maybe pay down some debt. This kind of move can affect the stock price and the overall health of the company, so it's definitely worth a closer look. The core of this report is KKR's plan to offer up to $750 million of its common stock. They've partnered with several sales agents, including Truist Securities, RBC Capital Markets, KKR Capital Markets, and SMBC Nikko Securities America to help them sell these shares. The way they'll sell these shares is described as at the market, meaning they can sell shares at prevailing market prices. They can sell them directly on the New York Stock Exchange through market makers or in privately negotiated transactions. Here's where things get interesting. The last reported closing price for their common stock on May 7, 2025 was $19.55 per share, while their net asset value, or MBOI, was significantly higher at $23.27 per share. It's worth noting that the sales price per share of common stock will not be less than the NAV per share at the time of sale. To make these sales happen, the sales agents are getting a commission of up to 1.5% of the gross sales price. This means that for every share sold, the sales agents take a small cut. Also, the advisor may, from time to time, in its sole discretion, pay some or all of the commissions to ensure that the sales price per share of common stock will not be less than the NAV per share. Let's take a look at what you need to know before investing. The SEC filing contains important information that a prospective investor should know before investing in securities. Please read this prospectus supplement, the accompanying prospectus, and any related free writing prospectus and any related free writing prospectus. And any related free writing prospectus and announcements incorporated by reference in this prospectus supplement. And the accompanying prospectus before investing. Let's break down those fees so you know what you're really paying. The sales load or commission is estimated at 150%. This is what the sales agents get for selling the stock. The offering expenses, which are the costs associated with making the stock available, are estimated at 0.07%. The base management fee is 3.7%. The base management fee is 3.17%. This covers the cost of managing the investments. Next up is the incentive fee, which is 2.37%. This is a performance-based fee, meaning the advisor gets paid more if the investments do well. Interest payments on borrowed funds are a big one at 8.88%, and other expenses, including accounting, legal, and auditing fees, is 0.84%. Finally, we have required fund fees and expenses, which are the cost of investing in other funds. That comes to 1.54%. Altogether, the total annual expenses reach 16.88%. Keep in mind that this figure is high because the company uses leverage or borrowed money to increase its investments. Alright, let's talk about risk. The prospectus supplement states that investing in KKR's common stock is speculative and involves a high degree of risk. Some specific risks include that if the investment advisory agreement were to be terminated, or if the advisor loses any members of its senior management team, their ability to achieve their investment objectives could be significantly harmed. There are also conflict of interests as a result of arrangements between KKR and the advisor and related to obligations the advisor and its affiliates have to our affiliates and to other clients. The company might be obligated to pay the advisor incentive compensation on income that they have not received. If a period of capital market disruption and instability continues for an extended period of time, there is a risk that investors in their equity securities may not receive distributions consistent with historical levels or at all, or that their distributions may not grow over time, and a portion of our distributions may be a return of capital. Our affiliates and to other clients, the company might be obligated to pay the advisor incentive compensation on income that they have not received. So what will they do with all this cash? They expect to use the net proceeds from this offering to invest in new or existing portfolio companies, or for other general corporate or strategic purposes, including repaying amounts outstanding under their existing indebtedness. They're aiming to use almost all of the money within 6 months. This section outlines how the shares will actually be sold. Truist Securities, RBC Capital Markets, KKR Capital Markets, and SMBC Nikko Securities America will act as the sales agents for the common stock. They will receive a commission of up to 1.5% of the gross sales price per share. The sales agents are not required to sell any specific number or dollar amount of common stock, but will use their commission of up to 1.5% of the gross sales price per share. The sales agents are not required to sell any specific number or dollar amount of common stock, but will use their commission of up to 1.5% of the gross sales price per share. The sales agents are not required to sell any specific number or dollar amount of common stock, but will use their commission of up to 1.5% of the gross sales price per share. The sales agents are not required to sell any specific number or dollar amount of common stock, but will use their commercially reasonable efforts consistent with their respective sales and trading practices to sell the shares. Now let's talk about conflicts of interest. Each of the sales agents, together with their respective affiliates, is a full-service financial institution engaged in various activities. The advisor is under common control with KKR Capital Markets LLC, a sales agent of this offering. Furthermore, an affiliate of SMBC Nikko Securities America Inc. is the administrative agent, collateral agent, and a lender under one of FSKKR's credit facilities. Here we have Deloitte & Touche Shell, an independent registered public accounting firm as stated in their reports, which are incorporated herein by reference. Now, what's my take on all of this? FSKKR is really looking to boost its financial flexibility. Selling stock can provide a cushion for future investments. On the other hand, it also might signal that they see limited opportunities for high return investments right now, since raising capital this way is often less profitable than through debt. While the investment objectives are typical for a BDC, it's hard to ignore the high expense ratio of 16.80%. High costs eat into returns, so investors need to carefully assess if FSKKR's strategy can deliver enough value to justify these expenses. I would also keep an eye on how quickly they deploy this new capital. If they take too long, it could drag down overall returns. Just keep in mind that the risk factors we discussed are real and could significantly impact the company's performance. Alright, that's our breakdown of FSKKR's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. Don't forget to check out the Discord in the description. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. See you next time.